What is going on, Savage Life family? Today we're going to be talking about the well-established company known as Square, led by Jack Dorsey. Okay, so all of you know this company has been spiking up. So we're going to be talking about the reasons of why it's been spiking up, and if you think it will continue to spike up. Before we do, smash that like, subscribe, and comment, and let's move on to the video. Alright, so we're going to be looking at Square's year-long chart, and it's currently at 167. It's gone up $104 in the past year, and when I recently made this video, it was at 150. So it has spiked up recently since about $17 since I made my last video on Square, and I kind of explained why I thought the company would go up in future projections. Now, I'm going to be talking about why this company is boosting so much. If you compare it to other stocks in its industry, it has a better PE ratio of 260.36, as you can see here. Now, I like to say an average PE ratio is about 20 to 25 depending on which industry you are speaking about. PE ratio is about 32 in the industry that Square is in, including PayPal, Venmo, etc. Now, 264 PE ratio means the company is either insanely overpriced or has insanely high expectations, which means people truly believe that Square is undervalued and it should be worth a lot more than it is, or people are just hyping up the stock and a fix is coming real soon. Now, when you look at a company like Square, I definitely have high expectations for it. I don't believe it is overvalued at all. 167 to me is a cheap price for the innovations that Square is going to be doing. If you look at Morningstar's fair value, as you can see here, fair value is $64 and their uncertainty is very high, meaning they don't have trust at all, even though they've been smashing earnings besides Q1, of course, which was affected by the pandemic majorly. Now, what mostly gave Square a boost was the usage of Cash App. The use of Cash App has gone up from underneath 24 million in Q1 to all the way to over 30 million in Q2, which is insane since Cash App has many features, as well as transferring money to your friends and family instantly, buying Bitcoin, transferring Bitcoin, and even now they have the stock market implemented into their app. Now, as you all know, when these famous companies, Tesla and Apple, had their split on Monday, which was 2 days ago, Robinhood had major outages that left some people out of tens of thousands of dollars due to receiving errors when buying or selling stocks. But shockingly, Square had no glitches at all, no outages reported. So of course it had to do with the amount of information and option trading that goes on behind the scenes of Robinhood compared to that of Square. But having an outage on a very important date will definitely have an effective view of the app. So there's been blog posts and Reddit posts everywhere of angry people on Robinhood stating how much money they've lost due to the glitches. But I honestly expected this to happen. It's not a perfect app. I still have faith in Robinhood, of course. And most of those affected either use the app to day trade, which is definitely not a good idea if you're using Robinhood to day trade, or like me, tried buying into a company like as soon as Apple had their split and they were priced at 125, 126. I tried to buy in, but my order did not fill, even if I tried on computer, and then I had to switch back on my phone, and it eventually filled at the price of 130, and I was like, wow. I lost $5 per share, and I ended up buying like a 10 shares, so that's about $50 I lost out on. So I lost out on the potential to make that money, but at the end of the day, I'm holding it for long term, so that's to be expected. But a lot of brokers are listing this company as overvalued, and a lot of brokers always tend to list companies with great potential as overvalued because they look at the chart, and I don't possibly think they look at the long-term gain of things and how the world is transitioning in the sense of everything being virtual now. Me personally, I don't even carry cash in my wallet, and there are a lot of you as well who are in the same boat. I use my card for everything. If not, I use my phone, my Apple Pay for everything, because I genuinely don't like holding stuff and cash. Now, if we're just seeing the growth on these charts here of Square, we can see that the future projections are in our favor if you are invested into Square. Now, of course, if you hopped into the company at a low price under like 120, definitely I would sell out to make some sort of gains, but not my entire portfolio. You definitely want to keep Square on for the long term. I see personally Square hitting over $200, over $300 in the upcoming couple of years if they keep on these innovations. Cash App is a wonderful app. Like I said in the past, personally, when I first used it, it does not look safe, but with this huge market cap, they are implementing a lot of security features that will encourage a lot of new users to join on the app. Okay, hopefully we get a majority of the Zelle users switch over to Cash App, since they figure out that you can do a lot more on Cash App than on Zelle. So if you enjoyed this video, be sure to smash that like, subscribe, and comment. If you're not a Robinhood user, if you click in the link description below, you can receive a free stock there. Win-win. Okay, up to $50, up to $250, who knows. And if you're holding onto Square for the long term, let me know in the comment sections below of why you are and what you think of this company's future projections. Okay, on to the next one. See ya.